A lot going on. I feel like in today's world with politics and the world and the stock market, couldn't be uh, more crazy. I don't know if a lot of you have money also in the stock market. I still have money in the stock market because, of course, I'm the best at buying high and selling low, which is why I like to use most of my money in a self-directed IRA account and do a little less in the market. But I did decide to go back in the market a little bit because I had some idle cash sitting for a little while about a month ago. So you can know how that was, right? It's been awesome. All right. So again, as always, please share, put in the question answers in chat. Whatever, any questions that I can answer, I'll get towards to that here shortly. So let's get started. As a reminder, this is educational. I'm not a CPA, a financial advisor, or tax or an attorney either. I want to share with you what we see, and because what I've either done in my life in investment world, also what I'm able to see. I get to see tens of thousands of different investments of what people are doing, how they're investing, how they're using their IRAs in and outside actually of Roths or traditional accounts or 401ks. I get to share what's working, and I also can share what's not working. And I've been involved in several deals that don't work. I was talking to a friend of mine yesterday, and we were talking about percentage of deals that don't work. And in this alternative asset space, that happens too. And so, coming up soon, I think I actually had someone reach out to my team, and I sent me an email saying, "Hey, love your webinars. Can you do one all about when things don't go as planned?" So that's coming. Probably it's going to come here this next month. Because that happens, right? Inside or outside of your IRA, it doesn't matter. There are, you gotta make sure and do all that you can to do your due diligence. And even then, sometimes there's problems and how to handle those problems. And just like real estate, that does happen. So anyway, so what we're going to cover today is this. We're going to cover Trump's executive order, crypto and self-directed IRAs, the contribution limits for 2026, why Horizon Trust, and then we'll leave it with some question and answer. So thanks for being here and looking forward to it. So first, this has come up. People have asked me about it. What does it mean? Trump's executive order, basically allowing and opening 401k plans to alternative assets. What does that mean? I've had a couple friends of mine, oh my gosh, are you worried? Because other brokerages and companies are going to be now allowing alternative assets. Not worried. First of all, this was signed in August of 25. And you know where we are now. It's almost been a year. In the next 6 to 12 months or more, we'll see some rules on what will be finalized. What does this executive Trump order really mean? We don't know exactly. We don't know what alternative assets will be allowed for these big brokerage houses to accept. I can't imagine that all of a sudden they're going to allow an individual with their IRA to invest in a hard money loan or in some kind of Reg D offering. I don't see that happening, and I feel like it's, if anything, it's more exciting because we already can do those things. We've been able to do those things for 50 years, self-directing, and our company's been around 15 years. And what this executive order is doing is allowing them to put together some rules to around retirement accounts and around what the typical brokerage houses can offer. So, as most of you know, the menu is pretty short on what they can offer. It's typically their mutual funds, ETFs, bonds, etc. Now, when they go to offer other alternatives, I imagine there'll be some ways to buying some cryptocurrency. There'll be some ways to invest in some different kinds of real estate transactions and highly regulated and larger projects. That's what I imagine. So, look, one thing it does do, this executive order confirms that what we've been doing for years is a valid way of utilizing retirement accounts. It's also going to bring more attention. As there's more alternative assets, there'll be more compliance, which I think is great. I think compliance is really good. And look, right now, for those of you that are already self-directed, if you're clients of ours, and many of you are, or thinking about it, we're ahead of the curve. You are already self-directing most likely and already chosen and picked an asset. So this executive order, in a nutshell, in my opinion, doesn't really mean anything and doesn't really affect you or I. It is exciting because it's being spoken about. It's exciting because they're using the word alternative assets and 401ks, something that I've been talking about for 20 plus years and that's been around for 50 plus years. So that's good. I think these are all good things. We're just ahead of the curve, and so at Horizon Trust Company, we will continue to not only direct but take your direction, I should say, and let you invest where the rules are not prohibited. So we want to make sure it's still with the right people and the right kind of assets. You can't commingle your non-IRA with your IRA money and buy a rental property and hold it, things like that that we've talked about in the past. So. I would not lose sleep over the executive order, Trump's executive order, and or get too excited about it either. So, anyways, moving on. So, as far as crypto and self-directed IRAs, yeah, it's been around for a long time. This has come up because it is one of the hottest subjects people keep talking about. Even when it was, it's dropped, it's now a little bit trickled back up. If you followed it, it's if you're yesterday again, I was with some people, some investors, and they're talking about holding, some percentage, some small percentage of their portfolio, though that they're buying in cryptocurrencies. Can you invest in and use your self-directed to hold Bitcoin? Absolutely. It's been possible for several years now in the self-directed space. Basically, your IRA would own the crypto and not you personally. So right now, if you were to go and set up an account, there's so many platforms that you can go online, and when you go online and set up that platform and create your account, it's in your name. Some will let you do it in your LLC name, not all, but a lot is in your name. How it works with an IRA is your IRA would be the owner on that platform that's purchasing the cryptocurrency. And then you would direct your funds from Horizon Trust Company to that platform to start buying and selling the different crypto investments that are suitable or that qualify. It's our job at Horizon to handle all the compliance and IRS reporting. So the big thing that I see a lot of people doing is using their self-directed IRA, especially in a crypto perspective, or maybe a venture capitalist kind of, or a PE kind of investments or startups. They love to do it with their Roth. So if you're thinking about the reason why, I guess I should say, people love using their Roth on these type of investments because they also have the bigger opportunities for growth. So I'm not promoting or saying you should put a large chunk of your money in these big growth opportunities or startups or cryptocurrency, but a lot of our clients are putting a small portion in these buckets. This, like I said, this is one of the hottest things people are talking about. They just want a little piece of it. Well, if it's going to do what, all the world says it's going to do, or whatever marketing that you might be reading, and I said marketing on purpose, right? Uh, then there's a potential for it to one, two, three, or five, or 10 times what you've put in there. And so if that's the case, having and owning your cryptocurrency, Bitcoin in particular, in this example, you want to be owned by your Roth. That way, when the Roth, obviously, when the crypto grows and doubles or triples, or if it does double or triple, right, then all those gains they grow tax deferred and then they come out tax free. It is the best account. The Roth is the best account to be utilizing when there's big, large returns slash multiples. Uh, the traditional, obviously, that grows tax deferred, but then it comes out and you pay taxes. Doesn't come out tax free. It comes out and you'll pay taxes on it. The advantage, obviously, is you're getting a tax credit on your tax return today when you put in monies into your retirement account. So when in a traditional account. So the other thing that a lot of our clients are doing is they get excited about maybe some of these startups and or something that could be a bigger multiple, and they don't have a Roth. You might be in that boat where you don't have a Roth. We can help you convert your traditional IRA or your old 401k to a Roth. Now you'll pay taxes now on that conversion, but all your future growth is then tax free. This is important. This is a strategy that many, many people are doing, and you can do it in baby steps. You don't have to do all of those You don't have to convert all of your money. You'll definitely want to consult with your CPA to find out what year and how much you should convert from your traditional or from your old 401k over to a Roth self-directed account. This strategy, I believe, is something that almost all people should do. Now there's exceptions, right? If you don't have any years where you can, if your account's too big and you have no write-offs where you can offset that conversion, then maybe you shouldn't. Or maybe if you are going to be retiring soon, then maybe you shouldn't. If you're going to start taking distributions, then you probably shouldn't. But for the most part, if you're still in your building and accumulating and compounding time of your life, getting your monies transferred over to a convert or converting over to a Roth or some portion of it can be great. Now I've got both. I have a Roth and I also have a typical traditional retirement account. And so I've not been able to move over all my traditional to a Roth quite yet. So it is common to have both things. So as far as, as far from a compliance standpoint, your IRA would own the crypto. You can't use it personally. That's prohibited, right? You can't sell. That's the thing people ask as well is can I sell? I own, like, let's say you own cryptocurrency in your name or in your LLC name, and then you want to move it and have your IRA buy it. You cannot sell it. That would be self-dealing. Also, there's a fair market valuation. Every year we have to report what the valuation is, which is probably one of the easiest, if not the easiest valuation to update on your statement with us at Horizon Trust Company. Why? Because at the end of the year, you know what it is. You know what Bitcoin in particular, we can talk about that. You'll know what is trading on at what dollar. That is the value. So if you own X percentage of Bitcoin, you can easily put that in your market valuation. Horizon Trust, we handle the compliance and paperwork and all the IRS reporting for contributions and distributions. This is a good reminder. I feel like I always get lost every year because the numbers tweak just a little bit typically every year on what you can and cannot do in contributions. Here's a nice cheat sheet for everybody. If this is for 2026, in a traditional or Roth IRA, you can do $7,000, or if you're over 50, it's $8,000. In a SEP, you can move up, you can do up to $70,000 or 25% of your compensation. So whichever's greater. So I'm sorry, lesser. So if you made $100,000, your max contribution would be $25,000. Simple IRA, 16.5. Solo 401k, 23. If you have a solo 401k, you also are the owner. So the employer and the employee combined can do really, I think it's almost up to $72,000 this year in 2026. So, and then HSA. This is, you're going to hear me talk a lot more about HSAs, health savings accounts. These are retirement plans that are triple tax savings. You get to deduct them now in your contributions. They grow tax free. And then when you use the proceeds for any medical things, you get to take them out and you don't pay taxes the third time. This is the HSA is the most untalked about account I think out there, and it's one of the things I'm going to talk a lot more about. We have a new company that has been referring us a lot of business, so kind of put it on my forefront of my thoughts. Why is there so many people talking about this? Talk to your CPA that this is something that you should probably be doing. If you don't have an HSA account yet, you probably should have one. What's also really badass about these is on the HSAs, you can, for example, let's say you put in $5,000 into an HSA plan. You get to deduct that from your income because you get the tax break today. Now let's say you put it in crypto, like I just talked about Bitcoin, right? And it in the next year goes from 5 to 10. Okay, well, you don't pay taxes on that gain. And then if you want to pull out the $5,000 or all of it, but any dollar amount, when you pull it out, that gain, the $5,000, you do not pay taxes on that either, as long as you're using it for medical expenses. And the other thing you can do is you can postpone paying yourself back. Let's say it's going up really, really well. You can personally pay your medical bills out of your pocket, right? When the invoices come in, keep your invoices and the invoices and medical bills that you paid, receipt of those, and hold them for 1 or 2 or 3 or 4 years. and keep paying them out of pocket. And then keep letting your account go up. So now it's growing. And then you can pay yourself back. You can pull out the money now that it's grown more and more and pay off those medical bills. This is something you're going to hear more and more about. If you don't have an HSA plan, by the way, I don't have one. I'm going to open up one this month, an HSA plan, because of the triple tax advantage of an HSA plan. This is something that I think most people have not focused on, probably because it's also small contributions. But look, we all have medical bills, and as we get older, we're going to have more and more medical bills, us and our kids, our spouses. Anyways, moving on here, as far as changing the subject here, the Roth catch-up requirement, starting in 26, high income earners must take catch-up contributions to Roth accounts only. So no more pre-tax catch-up if you exceed the income threshold. So if you're making too much money, being able to do more than $145,000, you're not going to be able to do catch-up contributions in your Roths. The other thing is mega backdoor Roth. This is a lot of people. So okay, they love getting money into a Roth IRA, but they make too much money. So if you're in that boat where you want money in your Roth and you want to contribute to a Roth, but you make too much money, or you're a high income earner, and you qualify to open for a solo 401k, then with after tax contributions, you can actually put up to $72,000 into a Roth account if you have a solo 401k. So after tax contributions can be converted to a Roth, which is obviously this massive tax-free bucket that comes out later. It's powerful for self-employed individuals, business owners. Our Horizon Trust Solo 401k is built exactly for this strategy. We're opening up more and more and more people's accounts, solo 401ks, because they're looking to contribute to a Roth account inside of their retirement account. This is a very powerful way to contribute. As far as days to remember and guidelines here, it's very timely, right? Because we're talking about 2025 a little bit right now, because tomorrow is our deadline for some of these things. And I'll talk about which ones here in a second. But first, for 2026, establishing your 401k must be done in contributions by the end of 2026. Same with any Roth conversions must be completed. So if you're wanting to convert part of your money to a Roth, you'll want to do it 2026. Now, don't worry. This is a lot of information. I'm giving you like fire hose information here, just amount of information. Schedule an appointment, get with my team. We'll help you and see if this qualifies for you, if this makes sense for you, and if where these dates might settle in for you as well. Also, when it comes to IRA contributions, the deadline, frankly, would be today. It's tomorrow, but at Horizon Trust Company, we really need to get it in by today. If you're looking to make any contributions for 2025, right? In this example, I'm talking about contributions for 2026. You can make those IRA contributions all the way up through April 15th of 27. Same with HSA. They are due. You're due by April 15th of the following calendar year for your contributions. So good things to remember. So hey, if anyone wants to open up an HSA account, in fact, even myself, I know my team's listening, probably should do that so I can contribute for 2025 today, and then I'm set, and then I can file for the next year. So that's something that I'm going to do today. Claudia, make sure I do that today. All right. So look, why Horizon Trust Company? Again, I'm going to go back to some questions and answers here too, because I wanted to dive into that. But look, retirement accounts are not investments. A self-directed IRA account is not an investment. It's a container. It's an account. It's like a vehicle which lets you choose where you want to invest your funds. So you get to invest in IRS approved investments that have huge tax advantages. You get to invest in alternative assets like real estate and crypto, like we talked about today, or notes or gold, etc. But you get to direct and you choose those investments. We handle the compliance, making sure the documentation is done correctly. And as always, those who qualify is that anyone who has an IRA, for an old 401k, a 403b, 457, the list goes on. If there's some other number that I didn't mention here, doesn't mean it doesn't qualify. Most likely it does. If you're currently contributing to a 401k plan that's active and current, those don't qualify to move over into a self-directed IRA account now. It's only when you're no longer working with them, if you leave or let go, etc. As far as investments go and what you can invest in, it's limitless. This is just a small menu of things that you can invest in. I'd say 70% of our clients are investing in some kind of real estate, or they're LLCs that are investing in real estate. They're lending, they're fixing and flipping, they're investing in startups and cryptocurrency, precious metals. For example, if you open up an HSA and you have an HSA and you also have a Roth account and you want to invest in a real estate deal or a loan or something, both can invest. They would be titled differently, right? Your HSA would be titled with an HSA account number, and your Roth would be with your Roth number, but both of those things can invest in the same investment. And so you can invest in so many different things. And so, in the last month, I've seen more people invest in what have I seen them more invest in? There was some SpaceX stuff that I saw that was creative and alternative. There was a flipping some equipment and some real estate as well. I would say a lot of fractional club members, people that are investing in syndications. They're one of many that are investing in several different, one of many investors investing in a real estate project. That's very typical, and that's what I'm seeing a lot of investors do. Now, remember, this is probably one of the greatest things about investing inside of your retirement account. Many of you, many or at least many people that I meet, are investing their money that's in their checking account in different opportunities, in startups and real estate deals. Now, I'm not here to say that you're going to make 20% every year on your money. This is hypothetical, and I'm just showing the power of compounding. You can go and type in on our website as well, our calculator on compounding interest. Plug in 6%, plug in 10%, 12%, 30%. The difference, though, is if you are investing it outside of your IRA rather than inside of your IRA and making these returns, your compounded interest and profit year after year is huge. So I could put $100,000 in from personally invest in a deal, and I could have another 100,000 from my IRA invest in that deal. If we invest in the same deals over a 15-year period, look at the difference. It's over a $600,000 difference just by using this vehicle. So understanding growth and compounding, use your IRA, and just take this for any number. 5,000, invest $10,000. Some people are like, oh, it's too small. I'm going to open up a self-directed IRA, but I only have the initial $7,000. It's not too small. The power of compounded interest is a game changer. So look, I set up Horizon Trust 15, 16 years ago now because I was wanting to solve a problem in the industry, a problem where there was a lack of communication, there was a lack of help, there's a lack of education, there's a lack of urgency. And speed is one of the biggest things that kills deals and opportunities. So if it took my competitors 2 or 3 or a month longer to process transactions than us, 1 month of interest on a deal is potentially anywhere from 0.5% to 2 or 3%. And on $100,000, we're talking about $500 to $2,000 just in time where people messed up. And so that is why I started Horizon Trust Company so many years ago, is to help individuals with the process, understand that it's available, hold your hand to the process of the application, the documentation. And look, we're still getting, we're growing quickly, but at the same time, we want to help. And so if we do drop the ball, I want to know about it. And we want to jump on top of it to make sure the process is better for you the following time. And so we really, having almost 9,000 clients now, it's our job to really keep the white glove service still there for each and every one of your investments. We try to vet out any prohibited transactions. Now, we don't vet and underwrite deals themselves, but we do vet out the documentation and doing the best that we can to see if there's any prohibited transactions happening or any rules, IRS rules that you could be breaking. So we do that as well. And then speed, like I said, speed is probably the most important in education. On education too, if you want to find it, as long as you don't make fun of me too much. About a year and a half ago, almost 2 years ago, I started a podcast called Generational Gains with my son Carson. He had started his career in business about 3 years ago now, maybe 3.5 years ago. And he's been buying some real estate using his IRA. He doesn't work for me, by the way, and does insurance as well. And he's just got his own little business. And so we just thought we'd start a podcast and we just talk about. I thought it was gonna be more for kind of a marketing and teaching people about real estate and deals that he's looking at and that I'm looking at. It's frankly become a bit of a journal experience for me. And I am certain if you have any young, if you're young or if you have a young family, it's interesting to hear his perspective. And he surprises me by his wisdom. He surprises me on how successful he is. And he also surprises me that he doesn't remember that I taught him half the things he's talking about. He doesn't really give me credit for those things, but I think that's how it works. So he's a genius in his own mind frame and his own experience. But if anything, this podcast, Generational Gains, I absolutely want to plug it. I think it's worth your while. And we take some simple concepts and some real detailed concepts of things he's doing in business and real estate that I'm doing as well, how the father-son dynamic works. So that's I'd love to see it. It's on YouTube, Generational Gains. Again, the beginning stages are probably a little bit harder for you to listen in on because we're new, and the more recent ones I'd say we've gotten a lot better at. So, but they're raw. I mean, you get tears, you get laughs, you get ideas, how to get funding, how to do certain things. What we're doing, it's worth your while. I think. I hope so. A couple other things here before I wrap up and go to some questions and answers. I want to share is some mistakes that people make when using their self-directed IRA. They use their IRA for potentially personal benefit. Can't do that. Can't go live in the asset that you purchase. There's a couple other things you can't do. Can't commingle funds. Same example, like I've gotten this investment property. I got my IRA owns it. All of a sudden, I don't have enough money to finish it off or have expenses, and I put personal monies into it to finish it. Can't do that. The wrong titling. I've seen people try to do that where you try to title the contract or title, et cetera, in your name or your LLC name. If your LLC is owned by your IRA, that's good. But if your IRA is investing in a deal directly, putting money up, then the IRA needs to be titled on the property. Keeping good record keeping, especially for those who have checkbook LLCs, this is really important. And then obviously taking funds personally out for distributions, understand the consequences that come there. So for those of you that are new or not new, or you're doing the HSA thing like I am today, open up a self-directed IRA account. It gives you access to control. You can consolidate old accounts, old 401ks with traditionals and get those into one account, consolidate them, and obviously book a call with our team. So I'm going to put here in the slide. Here, let me stop sharing here. My information. I'm going to go over. This is probably some of the best part of these webinars is going over your questions that you might have. I'll also bring Claudia on to do that. But email me. My email is gregherleen@horizontrust.com. It is in the chat. I'll put it in there as well. And so I appreciate everyone's time on my little presentation. I know this is different because I typically don't dive into some of these contribution limits and HSAs, et cetera. So reach out to me, schedule an appointment, email me if you're looking to see if there's a fit for you, or if you just have questions. Hey, I'm still trying to get my investment done. I've been with Horizon, and I've had some of those. We get those every week where it's like, hey, I've been with you for 2 weeks. I'm trying to get this done. Look, I don't hold back. I'll tell you the good and the bad. And so, sometimes clients, and I take fault for that. If the client feels like we dropped the ball because we didn't explain it well enough or go fast enough, we want to make it better. And I think that is the difference for us compared to others. So let me just jump in here. I'm also going to bring Claudia on if she's listening here. I think she is. I'm going to go over these questions. Some really good stuff here. I'm going to start here from the beginning and have Claudia join me. So hey, let's see. Hey Claudia, thanks for joining. You'll help me here as well. If my crypto is currently in Coinbase, well, before let me introduce Claudia. I should do a proper introduction to Claudia. A lot of you probably know Claudia. She's been with me for many, many years, and before she was with me, she was with a company that used to refer us hundreds, if not thousands, of clients. And it's so good to have you. And if you don't work with her, you absolutely, if you work with our company, I've worked with someone on her team. So thanks, Clyde, for being here today.
Absolutely. Thank you for having me. It looks like we had some great questions while you were doing your presentation, so we can definitely dive in. I know that you were going to answer a question about crypto. Is that what I heard?
Yeah, I just saw the first question here from John. If my crypto is currently in Coinbase, how do I get it transferred into a Roth account? So, in this case scenario, John, you can't move the crypto into a Roth. What you would have to do is create a Roth account. We can help you do that at Horizon Trust Company. And then you'd have to fund the Roth account. You have to put cash into the account. You can't move an asset into the account. So essentially, you'd have to probably, if you don't have any additional cash, you would have to cash out, sell your crypto in Coinbase, and then once you have that cash, you then can contribute it to your Roth, and then your Roth would then be the owner of the crypto. And if you do that all really quickly, you probably only lose a few days of being out of crypto. Now, if you think crypto is going to, maybe the right time of doing this is, when the market's down. But I don't like to play the market because every time I think I know when I'm doing it the right time is when I'm doing
Right.
it the wrong time. So I would just say the more important part is get money into your Roth and invest in crypto. Because
Right.
if you think crypto is going to grow, which you obviously do since you're in Coinbase, it's probably going to grow more than what it is today. And if that's the case, you want that growth to happen inside of your Roth. So,
Mhm.
does building a Roth make sense at 6 years old if I'm not planning on drawing from my investment accounts for 70? You can do that math real easily. You can actually throw it in Chat GPT. It will tell you the answer. My answer is 100% yes. If you've got 10 or 12 or 13 years of build time, there is I cannot imagine. I mean, obviously, when I say 100% yes, talk to your CPA, consult your tax advisors. But I get excited about it because you have a big growth window. 60 is the new 50, first of all. So you're good, John. So let it, if the opportunity for it to grow for the next 10 to 12 years, it could be pretty huge. And so might as well if it's worth $100,000 today and you pay the taxes on it today, right? On that 100,000, but now the 100,000 moves to 150 or 200. When you pull out that 200, you'll pay nothing on that gain. So anyways,
Mhm.
thanks, John. I'm gonna one more to John here, and Claudia, I'll pass it here to you. I've heard
Yeah,
that
go ahead.
maxing out HSA first and then Roth or traditional. Do you agree? John, I don't disagree. The more I've studied the HSA, the more I believe, and the more I see my own parents, right? I feel like my family's pretty healthy, although we just had all kinds of emergencies happen this last 6 months, broken arms and legs and all kinds of
Mhm.
things. I could have used it for that. And so you probably, health happens every single year. You might as well fund your HSA. You might as well put if you have a $5,000 deductible plan for your family, or more, right? I think mine's 7,500. Might as well put the 7,500 or 8,000 into an HSA and then let it grow. And if I need to pull something out to pay these expenses when they come in, great. And if not, I'll just let it keep growing. So yeah, it probably makes sense. Anyways, Claudia, I'll pass it to you since I've been doing all the talking.
Yeah, so I have somebody asking, how do you evaluate a syndication deal? And how do you know if it's a good syndication? How do you evaluate syndication returns compared to how long the money is tied up? Those are all great questions. Obviously, we're not financial advisors, so I'm going to have Greg answer it because he has a lot of experience in it, but he's not telling you that you should invest in anything. I do want to say that.
I have a lot of experience in it because I've seen both sides of it too many times. I still am a sucker for a opportunity that where I can 5 times or 10 times my investment. Now, old me in my 20s would go all in on that, right? Where you would, but new me, the last 10 years of my life, I've learned like, okay, if it can 5 or 10 times multiple my investment, then I only want to risk, 5 or 10% of or a smaller dollar amount in those kind of investments. So first, be aware of right not being necessarily all in on something that is like a venture capital deal or a startup. Those are typically more dangerous. The likelihood of them succeeding is a lot less, right? I mean, some friends open up barbershops, and I don't know. I'm joking. Claudia just didn't. And so or a restaurant, right? But
Yeah.
so that's one point. I guess the other thing I would say as far as underwriting goes, really getting to know who you're working with, but also having legal look at your contracts and also understanding the potential debt that the project might have.
Hmm.
And even though you might not be a guarantor in a syndicated deal where there's debt, if there's debt, I would want to know what the terms are of the debt. Why? Today, what I'm seeing are so many real estate deals blowing up because people bought and borrowed, I should say, real estate on investment deals 3 or 4 or 5 years ago and bought these or got these loans that had balloons that were, due now and had these balloon
Hmm.
payments and they're upside down or they're in trouble or the payment's going up through the roof. So understanding the debt, I think, is really important. Understanding who you're investing with is very important. And then getting some counsel potentially from legal to make sure they double or triple check things. Even though it might cost you some
Hmm.
money, it could cost you a lot more, could save you a lot more money in the future.
Yeah. Another thing to consider is you not having the money right when the term is done. So being able to be okay with not having that money right away if something does go longer than it should. I see that a lot with real estate deals that it's like 6 months or a year after when it matured and you still don't have your initial investment. So making sure that you don't need it the day that it matures because sometimes that's not the way that it goes with syndication deals.
Yeah.
Um,
And again, a reminder because we're going to keep going through all your questions here, get through most of them. We have our link in there. We have my email in there. Respond to us. Shoot us an email if you want to get something set up, or if you just have questions. Please schedule an appointment. I got to keep going back to that because I want to make sure if we don't, get to all these questions, I want you to have an appointment with my team. So go ahead.
Yes. Larry is asking a lot of questions about the Form 5500. Who creates the form? Who files? The filing requirements, fees for not filing the form. How do I resolve if 5500 not filed timely? Okay, I can go over this with
Sure.
with Larry's. Yeah. So for a solo 401k, any solo 401k plan that is worth more than $250,000 in market value has to have a Form 5500 filed on behalf of the solo K plan. Now, Horizon Trust will be responsible for doing the third party administration. We have a third party company that does the form filing for you. So we ask for a couple of questions, make sure that the market value is correct and accurate, and then we have them file it. Now, if you don't file it by the tax deadline, what happens is we would file an automatic extension on behalf of your 401k, and then we have until October, sometime in October, to make the final deadline. If you still don't file it at that point, if you don't do any sign, there are penalties that the IRS imposes on your 401k. It's not something that Horizon Trust imposes. It's the IRS that's asking for this. And this is for every 401k in the United States. It's not just for Horizon Trust. It's not something that we came up with or a rule that Horizon Trust does. It's something that the IRS did for 401ks. So that's how Form 5500s work. And we'll start sending you notifications 2 3 months before it's due and then give you a ample time to go ahead and e-sign it. You'll get an e-signature. You'll be able to sign it on behalf of your 401k. As soon as that's signed, then we file it over with the IRS or the third party files it with the IRS. Anything I missed
Uh,
on that?
no, that's great. And Katie, thanks for the shout out. I appreciate you working uh, with us at Horizon Trust Company. I'm glad you've had a good experience. I see, John, you asked something again about HSAs. I'm being interviewed live today on a webinar, I think at 2 o'clock, with
Sure.
a large HSA company, and so all they do is actually help people set up HSAs through us at Horizon Trust Company, and then invest in cryptocurrency. So. I'm seeing that your platform might not allow that for your HSA. Well, it means you just need to get your HSA transferred over to us at Horizon Trust Company. And once it comes over to us, you'll have a platform you can go in crypto. That's my plug
Yeah.
for you. But that is true. Some companies or custodians don't allow you to go into crypto. Just like self-directing, right? A lot of people that are in the stock market want to invest in crypto, and they can't, so they come over to the Horizon Trust Company to invest in it. So yeah.
Yeah. Somebody is asking, can you hold my hand and help me through my first investment?
Yes, here you go.
Yes.
Uh,
We Yes, we
uh,
actually have a department that's all they do. It's called the transaction coordination. And once your account has been funded or is in the process of being funded, if you already have an investment in mind, we will have you talk to our transaction coordinator, and they will work with the investment company to get all the supporting documentation and with you because there is an internal form that has to be signed, basically giving us access or the authority to send the funds over to the investment company. So once your account is funded, then we'll send it out. Now, if your account is funded and you still don't have an investment in mind, they can go over investment options in our investment corner. It's horizontrust.com, and there's a part of our website that is an investment corner that has options that other clients have done. So he will guide you. They will guide you in learning more about the investment options. And if you want to do your due diligence with that company, then you will have to go ahead and do your due diligence with them, and then you'll
yeah,
come back and do the investment.
I'm going to double down on what you just said. I just want to make sure it's clear. It's just education on different investments people do with their self-directed IRA. At Horizon Trust Company, like I said, we're passive. We're never going to pitch or push any investment. We don't get paid for that, so we're not going to
Mhm.
pitch or get paid for any investments you choose. We have on our website again an area, a portal where people can research like, oh, I want to invest in cryptocurrency. What are some platforms? And you click on that and you leave our website. So
Mhm.
you're no longer with us. Oh, I want to invest in precious metals. You click on that, go somewhere else, and you'll do your own due diligence. There's several different companies and different things, oil and gas, and different market segments. You can be doing this own. I always recommend like it's at least it gets your mind thinking about how creative or what kind of alternative assets people invest in. Then go find individuals that you might know in your area that are investing that, or research a good crypto platform that you want to use, and you can use your checkbook LLC to do such. And so we'll help you through the process. But again, holding your hand specifically, we do have a department. There's a couple individuals that once your account is set up and you're like, okay, crap, what do I do now? We have that person for you. So the only thing that we ask you to have is on that call is, hey, I'd like to invest in this. If you come on the call saying, I want to invest in this, I have an IRA with you, now what? That's prime for us then to have a conversation with you. So we'll then help you with the documentation, what the next steps are. The first time is always the most clunky because it's different for you, not for us, but for you because it's different. And then once you've done it once, it's a piece of cake.
Yeah. I have a lot of questions on here about crypto and how it works with a self-directed IRA, HSA, or any kind of self-directed account. So one of the investment corner options, one of the tabs is crypto digital assets. There's some options on there that you can vet out and you can see if you wanted to go ahead and talk to them about that. It is a third-party platform, of course, so you would send all of your funds over to Horizon Trust or fund your account with a contribution, and then you would set up an account with one of those platforms. We would do a direction of investment over to the platform, and then from there you can invest into any crypto assets that they have available. So that's one of the options on the investment corner as well.
And
Um,
and, and the other platforms are out there, right? Coinbase and a few others, right? Where
yes.
you can set up your LLC with us. So
Mhm.
your IRA would own your LLC, right? So let me back up. If you have a retirement account with us or not with us yet, first you gotta get the money established and sent over to us at Horizon Trust. Once it's at Horizon Trust, you can direct your funds from us to invest in an LLC that you're the manager of, but is owned by your IRA. Once it's in that LLC, which is this is the process that a lot of investors of ours use for crypto, that LLC will establish an account at Coinbase
Mhm.
or Gemini or wherever they're going to invest. Once, and I know some allow LLCs, some don't, but I assume most of them now do allow LLCs. So then your LLC, it's a few more steps, but your LLC then would have the account and it would send the money to Coinbase and you could do all the trading you want there. And so that is one format as well. Bitcoin IRA, it's another option that a lot of
Mhm.
our clients use, and there's a handful of others. So yeah.
Yes, definitely. It's crypto safe. That I don't think any of us would be able to answer. Definitely not Greg. If you
Look,
ask
I said it
Carson, he would say
before.
yes.
Yeah, I say it before. I mean, it's if it's something that you understand and like, and it sounds like it's probably new to you, Larry and or Pam, then I would tread lightly and dip your toes in it if there's interest. That's what I did when my son's telling me all about it. I'm like, it's just so foreign to me. So I just put a very small dollar amount in there. So that's for you to do your due diligence.
Roger is asking, what happens to all these investments if, God forbid, I'm deceased or our spouse or family members is not attached to the accounts slash companies? That's a great question. So one of the most important things about setting up any account, any kind of 401k, IRA, Roth IRA, is to set up a beneficiary for that account. So one of the steps that we'll do on the application process is we'll ask you who are your beneficiaries. You can do a revocable living trust or any trust that you have, or you can do a person or people that you want to leave this to. So if and when you do have that situation, then your beneficiaries would call us and we would just assign that as an inherited IRA over to your beneficiaries. So there's a whole process for that we can definitely go over with you, or you can go over with your estate planning attorney.
Yeah, and that's a good question, Roger, because I mean, it's the nice thing if it's titled correctly, that's important that we help you title it correctly. If the investment's titled in the name of your IRA, if something were to happen to you, they're going to get their Horizon Trust Company statement, and on the statement, it's going to
Mhm.
say you've invested in these real estate deals or crypto or whatever it's at. So then it's actually not that very difficult. So yeah.
Yes. Can you explain a little bit more on the mega backdoor Roth?
Yeah, look, the mega backdoor Roth, and there's all kinds of different things people call it. But that's probably the most industry-wide known one and the one the government talks about. It's basically a way where you can, especially if you are a business owner, meaning you have an LLC with the business, right? So if you have a LLC that has an actual business, makes money, and you then can have a 401k and you can contribute to the 401k a lot of money, like up to $72,000. You can contribute to that 401k. It's employee and employer both, and you're both of those people. So you can max contribute if you've
Mhm.
made enough money. And then after you contribute that, you then can convert, or it is convert
Let's convert it.
those traditional funds to a Roth account inside of your 401k. So, well, underneath the protection of your 401k plan. And so that is a way of doesn't matter how much money you make, you can make $1 million. And if you do it outside of a 401k and you earn too much money, you can't contribute.
Mhm.
So, and let's say you don't make too much money, then the laws only allow you to contribute $7,000. So that's not too exciting either. So if you really want to get a lot of money in there, either you should have some kind of other IRA you already currently been funding will help you convert it over, or the mega way, they call it them, is you contribute today X amount of dollars, max out, and then convert it to a Roth. That is
Convert
the
it right
that
away.
is the backdoor Roth that everyone talks about.
Yeah. And what a lot of people don't realize is that you don't have to do a full conversion. You work with your CPA, and a good tax strategist will tell you how much to convert. So they'll still tell you how much to defer. So they'll tell you, hey, put this, and you're not going to pay taxes on that right now. And then it'll be like, hey, before you get to the next tax bracket, this is how much you're going to be converting. So definitely talk to your tax advisor and go over your tax strategies so that they can tell you how much to do. A lot of people think that they have to do the whole thing. It's like, no. I know it says mega and I get it. It sounds like a lot, but you don't have to do the whole
Yeah,
thing.
yeah, yeah.
Somebody is asking, what is the difference between revocable living trust and not revocable living trust? That is a great question. Revocable means that you can change it at any time during your lifetime before you pass away. Non-revocable means that you cannot change it once it's established. I think, Greg, you would know a little bit more because you work with attorneys a little bit. I don't know, like, if I just want to get rid of it, what happens? There's no way that in my lifetime this is set in stone and I can't change it.
Well, irrevocable is definitely different than revocable. So when you say not revocable living trust, I don't, revocable means you can make changes. It's the 90% of Americans have a revocable living trust. The reason why you
Hmm.
have, by the way, it's not what Horizon Trust Company does. We do have, our attorney that prepares a lot of the forms for the 401k. He does them with their company, so we have a good reference or referral you can use. That being said, 90% of clients do revocable because it allows you to avoid probate. It basically tells the courts and your heirs and beneficiaries where you want your assets and to avoid them going through the court for the court system to decide where your assets go when you pass away. And even if you have kids, if you don't have a trust, then it will go through probate. And there's a cost for that. Even though you might have kids, it still seems like a simple thing. It will still go through probate. So everybody should have a living trust. If you have a home or kids or any assets, you don't have to be like a huge, millionaire either. If you have any assets, you should have a revocable living trust. Feel free to message us. We can send you a referral. Obviously, there's lots of people you can figure it out, but you should do that. That being said, I think the bigger issue people have is a will. A living will is it states what you want certain things, assets to go to, but it does not avoid probate. And
Mhm.
so a will does not do it. That is a common mistake. People have wills and they frankly are, in my opinion, almost worthless. They're better than having nothing. But it's like
Mhm.
will, revocable living trust. Then there's some other kind of more, onshore trust and irrevocable trust. It's a little more complicated. But if you have those questions, we have to refer you to an attorney. So yeah.
Yeah. Um, Somebody is asking after you leave a job, how long do you have to wait to roll over your funds from the job's 401k? Do you have to wait 90 days? You typically don't have to wait 90 days. When you leave a job, they usually give you 30 days to determine what you want to do with your health benefits, with your 401ks, with all of that. So in that time frame, you can decide if you want to roll it over or just keep it there and make the decision a little later. But you definitely don't have to wait the 90 days. Once you leave your job and you decided that 401k, you want to switch it over to a self-directed account, call us and we'll be able to get that set up for you and do it within 30 days.
Yep.
Tammy is asking, do you have any referrals or similar to investment opportunities? List of those used by other clients for CPAs tax
You want
strategists.
I mean that's a tough one. Again, I try to be careful because when we refer out, and something doesn't go as planned, it's a reflection of us, and
Mhm.
we don't like that. I mean, of course, we do have people that that some of our clients use for different tax things or trusts or CPA, and a lot of I would say just when it comes to investments, most people that move over to us or work with us came over because they had learned about us through an investment company. They might have learned about us through a crypto company or oil and gas company or a real estate syndication or fractional or whatever the case is. And so usually that's where they come from. So I say go back to your communities, do your research and see what you want to choose. But Tammy, if you don't mind, if you want to send a specific email to me and the team and say, hey, I'd really, if you had a CPA, we could send you two or three different referrals. You can do your own due diligence and see if there's a fit for you, if we've got them for you. But send us, Tammy, if you don't mind, a specific email, and then we'll get back to
What you're looking
you.
for.
Yeah. Let's try to wrap up here in the next couple minutes here. Maybe one more question and we'll wrap up.
Yeah, I
If there
don't
is one,
see,
or maybe there's
no,
not
I
one.
don't,
Okay, cool.
no.
All right,
Yeah,
well,
if we
well,
didn't get to your question for some reason, if it got lost in the chat or in the questions and answers, just send Greg an email. We go and we look at those emails right away and we will get you your answer as soon as we can. This sometime today.
well, great. Well, good. Thank you for spending your time with us today. Really enjoyed it, and look forward to working with you. If you're already working with us, thank you. If you're not yet, we'll see you soon. Thanks, guys. Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.